2024 will be remembered as the turning point for the collapse of the US dollar. And what the US government is doing right now is so dangerous, it literally will change the entire future of our world. Now, I know many people might think that the dollar being replaced as the global currency is just a myth. I mean, that's exactly what this Business Insider article reported last month, telling the world there is no big shift away from the US currency. But according to JP Morgan's head of global commodities, 1/5 of global oil trade used non-dollar currencies in 2023. Now, using foreign currencies for 20% of oil trade is a huge number, considering the fact that just a few years ago, the US government had an almost complete monopoly on the oil market with the petrodollar. But the 16,000 US sanctions levied against Russia have proved completely useless and only accelerated more countries' desire to shift away from the US dollar for trade. Now, one of those countries is, of course, China, who has seen their currency, the RMB, rise to the number 4 global currency according to SWIFT. If there is one chart you remember from today's video, let it be this one, which shows the share of China's cross-border payments and receipts in US dollar compared to RMB. In just 13 years, China went from closing 0.3% of its cross-border transactions in its local currency to now over 50%. That graph is unbelievable, but China's latest moves are even bigger and have sent shockwaves across the financial sector, as China dumped a record $53 billion worth of US treasuries and agencies in the first quarter of 2024. Richard Turin, a best-selling author and fintech insider, summed it up perfectly with this simple quote: "De-dollarization will be a slow process until it isn't." Which also reminds me of another famous quote from Ernest Hemingway's 1926 novel, The Sun Also Rises. How did you go bankrupt? 2 ways: gradually, then suddenly. Once you remove yourself from the US media bubble and start to pay attention to what countries around the world really want, you'll quickly see that de-dollarization is not a myth, but something that governments around the globe are actively working towards. This October, the BRICS Alliance will announce a new commodity-backed currency during its annual summit. But unlike the euro, which replaced currencies of individual countries, this new BRICS currency will be backed by gold and used exclusively for trade while preserving the sovereign currency of its members. Everyone, there's a lot that we need to break down in today's video, but to help us all better understand this, I'm bringing in a true financial expert. This is Kevin DeMeritt from Lear Capital, who's going to help us all understand the latest moves from China, BRICS, and what this means for the future of the US dollar and our global markets. Kevin, thank you so much for joining our program today and helping us all understand these incredible events that are going on in our global financial market.
Yeah, thanks for having me, Cyrus. Really appreciate it. Love the last interview and love your program.
Oh, fantastic. Well, Kevin, I want to go really into the main news story that is really dominating headlines right now. And I'm going to go ahead and bring up a graph here because this is something that, in Bloomberg even reported. China sells record sum of US debt amid signs of diversification. And what we're looking at is really a diversification away from US dollar assets. And this is the key thing I want people to take away. Gold share in China's reserves rises to the highest since 2015. And before you mention that, I just want to kind of give a visual to the people. If you look at this graph, we're looking at treasuries in the pink. You can see 2024, huge numbers going down. And I want to talk about this, Kevin, because I think this is something that a lot of people are discussing, hasn't really been, really reported in mainstream news. I think maybe a lot of us in the US are just not paying attention to this. A lot of other stories going on. But what's going on in this bond market and with what we're seeing with the US dollar and things like that?
Well, I think there's a few things going on with China. Number one, they would love to have their own reserve world currency, right? So the BRICS, they've been a part of that. So they're working on that. And look, if you're going to do that, then why are you holding, US dollars? You want to get rid of US dollars and hold something else. The hold something else that they have been purchasing is a heck of a lot of gold. So what people have been hearing about is gold hitting record highs and can't figure out why, because here in the United States, the demand for gold is probably about what it should be without some sort of economic event going on. Then why is the gold price so high? Well, it's China. They've been selling off an enormous amount of treasuries and purchasing gold. The second reason I think it's a big deal is, why would you want to hold US currency in the form of a treasury if you're only picking up, let's say, 4 or 5% where we are today?
Right.
But since 2020, the US dollar has lost in spending power or purchasing power terms 24% of its value. You just wouldn't want to be holding it, right? We wouldn't want to hold it here and somebody else in a different country doesn't want to hold it either. So I think you have a couple of things going on. We printed up so much money that the inflation rate has been high. Our purchasing power is going down. Everybody feels that. So do they. So they want to get rid of it for that reason. And on the other hand, they're looking forward over the next 5, 6, 7 years to, can we get this BRICS currency as a world reserve currency, something that some other countries can trust and are going to back, like they do the U.S. dollar. But they've sold a lot. The first quarter of this year, they sold $53 billion. And it might not sound like a lot, but they're holding 800 billion, and that first quarter represents 6.5% of their holdings. So if they continue to do that, we're at 24, 25% of their holdings that they're liquidating by the end of the year.
Yeah, I think that's a thing that people don't realize is that, China was the largest holder of U.S. debt several years ago, and it has been a very systematic moves from China. It's been very gradual, it's been very slow, but they were well over $1 trillion. Like you said, it's now down to 800 billion. And that is a staggering amount, if it's, equivalent to 6% in the first quarter. And we see a direct correlation with the gold as well, because I think this is what's interesting is, I know you and I both follow the gold market very closely, but we saw 2022, there was record amount of central banks around the world purchasing gold. We saw the same thing in 2023. And then here we are almost in direct correlation with China dumping these 53 billion. We've also seen central banks around the world continue this buying spree. So we've seen them once again, we're off to a very hot start in 2024. So this trend of buying gold and really trying to hold this as an asset, it's been going on for 3 years now with central banks. It's not slowing down at all.
No, it's speeding up, and that's why we're at record highs. And Business Insider today came out with an article that says the U.S. dollar has become so weaponized that central banks are snapping up politically neutral gold. So there's so many different reasons that these countries around the world are thinking about liquidating paper dollars, mostly U.S. currency, and moving over to something you cannot print. The central banks get it. The world's waking up to the fact that the governments are printing, not just the United States, but everybody around the world. And so usually in these cases, when you look back through the history of world currencies, we've had 6 since 1840. They usually last about 95 to 100 years. The US dollar has been around as a world reserve currency for 103 years. Okay. But there's a very specific pattern that each one of these 6 world currencies has followed where it fails in the end. And the United States is following that pattern almost to a T. Wow. And that's really, in my opinion, what investors need to pay attention to. Right. What happened in the first 50 to 70 years of a world currency, and what happened in the last 30 years of it? They were fairly fiscally responsible the first 60, 70 years. It's the last 30 years that debt skyrocketed. The politicians became drunk on, spending. And that's exactly where the United States is now. We had, $8 trillion of debt in 2008. We're at 34 trillion today. We have $1 trillion worth of interest payments now. And they keep spending money on everything from the Ukraine war to, paying off student loans. Right. Just let's throw money everywhere. And every time you do that, Cyrus, the value of your dollar becomes worth less.
Right. Oh, it's incredible. We've seen that, in real time just since the pandemic and the rise of inflation. And again, there's a direct correlation. Once this trade war again with China started, and we're, spending money in wars, we're going to talk about those wars and all of this spending a little bit later on in the program as well. But we've just seen that reflected in daily life in America, where I think there's an interesting thing where the stock market is performing relatively high, but actually, if you ask Americans, most people have a negative perception of that, saying, hey, the stock market's down, because they don't actually realize what's going on in the stock market. They just go to the grocery store and they just see, right. wow, what is this inflation? My dollar is just not what it was even 2 years ago, right? The cost of everything has just absolutely skyrocketed across the board and made things, almost, unaffordable for a large portion of the United States. And that's a tough one. But I want to shift to another news article, because this is directly what we're talking about. This is an interesting one. This was announced just a couple days ago that Thailand announces its plans to join the BRICS alliance. So I think this is something that you had touched on. I want to talk about this a little bit as well, because we're always talking about China and Russia. Obviously, these are, 2 very big adversaries to the United States, but we're seeing other countries as well. In addition to that $53 billion that China had dumped in these bonds. Belgium, which is also a very close ally of the United States, they've dumped 22 billion. So
Right.
it's not just China. I don't want it to be people to think, oh, it's just China and Russia doing this. These are countries around the world. Belgium saying, hey, we are going to reduce our US dollar holdings as well. Now we've got Thailand, which has always been a very strategic ally for the United States in Asia. Certainly, one that would have really good relations, with America. And now they're saying, hey, we want to get into the global South. We want to be partnering with China, Russia. We want to be expanding our opportunities. And de-dollarization is a large part of that.
Right. Yes. So I look for tipping points when it comes to investing.
Yeah.
What are tipping points, either negative or positive, right? The tipping point for the US dollar started happening when BRICS was announced. And here's the tipping point. If you have a few countries, if you had Russia saying, look, we're going to make the ruble the world's reserve currency, not a lot of people are going to pay attention to that.
Right.
When you get the 5 countries together, which represent 40% of the population of the entire world, right? Then you start to have what looks like a tipping point. What you're talking about is you're now adding in more countries, and it's not just Thailand, it's 40 other countries that are taking a look at this, including Saudi Arabia, which we've had an incredible relationship with a petrodollar with since the 1970s. That is a tipping point. When you start moving the population over 50% that would like to move to a different world reserve currency, the United States dollar is going to have incredible problems because we've exported inflation to those other countries. Right? We've exported the dollars that we've been printing to these other countries. If you think about it as a stock, if everybody listening thought about this as a stock, we'll just use an example of Apple stock. If 50% of Apple stock was held in a mutual fund somewhere, and it didn't see the light of day for 10 years, then 50% of its stock is somewhere else. I put an X amount of demand on the rest of the 50% that's out there, it's going to push it up more. If I issue more stock, it isn't so bad because the other 50% is being held and not seeing the light of day. People should think about that 50% in the mutual fund as these other countries, these other central banks holding US currency.
Right.
What happens the day that mutual fund says, I don't want to hold this anymore? I'm going to start liquidating 6%, 8%, 12%, 50% of the Apple stock that I'm holding.
Right.
Apple stock's going to start falling. The definition of inflation is too much money chasing too few goods.
Right.
The dollars that are held there are held. You don't see them. They're not available. But as soon as they are, when you start selling them, they come back to the United States. Now you have too much money chasing too few goods. So if you look at the history of world currencies, I know I brought this up. I'm going to bring it up again so everybody can understand this.
Please.
It started off with Portugal, lasted about 70, 80 years as a world reserve currency. Then it went to Spain, then it went to Belgium, then it went to France, then it went to Great Britain, and now it's the United States. Every single one of them failed for one reason. The fiscal policies and the monetary policies that they had in those countries were okay for about 50, 60 years. Then the last 30 years, they went completely off the rails, like what's happening in the United States. And in that country, they spent so much and the debt was so high that other countries that were holding those currencies says, no, I don't want to hold this currency anymore. I'm going to liquidate. That was the tipping point. It took the last part of when that debt started getting out of control, like what's happening here in the United States. It only took about 5 or 7 more years before people just said, okay, you're not the world's reserve currency anymore. We're moving over to France or Great Britain or the United States dollar. That's what feels like's happening right now. If you are a student of history and you looked at what happened to those 6 or 5 other world currencies and what's happening right now, that's what's happening. So these guys liquidating and getting the buy-in with the BRICS currency, to me, is one of the biggest tipping points the US dollar has seen for the last 100 years.
I agree with you. And I think I want to bring up this stat I thought was really interesting. This is according to JP Morgan's head of global commodities, that a fifth of global oil trade this year was settled in currencies different from the US dollar. As again, we're just seeing this, even a strategic move away from the petrodollar. Like you said, Saudi Arabia, I mean, very strategic asset, or our ally, I should say, of the United States. Obviously, we've had an incredibly lucrative relationship with the Saudis, hence why the dollar has been so strong for so long. But it's so interesting to see them really contemplate their options. Obviously, they want to have a good relationship with the US, but they're not saying, hey, we're not closing the door here. We're not going to have an exclusive relationship anymore. And, we're going to look at other options as well. And like you said, there's 40 countries on the door knocking on BRICS. We've actually got Russia, that is the sitting president of BRICS as for 2024. So there's about 200 meetings that are going on that are scheduled, that Russia has scheduled this calendar year. This will all culminate with the BRICS summit that will be happening in October. I think Indonesia has been rumored to also be potentially going as well, which is a huge country. Very, very big. Thailand, of course, is a big one because it's the first nation in Southeast Asia. But again, it could be a domino. It could be one of could open the door to many others that are going to want to come into this new alliance. And again, I agree with you on this tipping point. Kevin, I want to shift to this graph because I think this goes right along with what we're saying. And this is really a fascinating graph I want people to understand because, let's go back to the very beginning. So look in the bottom left of your screen, and this graph shows the share of China's cross-border payments and receipts in US dollar versus renminbi. So, not too long ago, 2010, renminbi is almost non-existent. It's 0.3%. US dollar, absolutely, the king here, 83%. And what you saw as of last year, March 2023, look at this steady rise. It has been a consistent, steady rise. And unbelievable for that to go now to 52.9% to be settled, cross-border, again, payments and receipts in renminbi now, as opposed to the US dollar. And again, a strategic move. All of this is happening. It really seems that China has a very solid plan here, and they're just kind of meticulously going about this, every day, just moving on, over time, when you start to zoom out, you're like, wow, went from 0.3 to now, well over 50%. Is that not an incredible graph that I think more investors need to understand?
100%. And when you match it up with where reserve currencies have lived over approximately a 95 to 100-year span of each one of those reserve currencies, and then you start saying, okay, I need to pay attention to the last 30 years. What is happening in those last 30 years will give you some sort of an indication if you can hold on to your status or not. None previously did, and I don't think the US dollar is going to either, because that graph is 13 years old. Okay, that we started in 2010. Here we are in 2024, but the graph itself stops at the end of 2023. So here you are at 13 years, and look at what a difference the cross-border payments have shifted. It's a dramatic difference from 0.3. You can basically say it was almost zero, and then it moves up to 52, almost 53%.
Yeah, bringing that graph up on screen for everybody to look at while you're saying that. It's incredible. It's incredible to see that rise. And again, I think it's going back to there's so many consistent themes that we're seeing, so many things that once you start adding them all together, you can see the direction that the world is going. I agree with your prediction because again, like you said, a few years ago, the national debt was 8 trillion. Seemed like a somewhat manageable number. Maybe there was even a thought at the time of, could we ever pay back that debt? Now that's ballooned to 34 trillion. We've got $1 trillion in interest payments. Now that's impossible. We know for a fact there's zero chance of ever paying that off. There's no chance that we're only going to increase. And that kind of leads me to the next thing I want to talk about briefly is, these continuous wars and the conflict that we're seeing. We're sending, $61 billion more to Ukraine. We're sending billions more to Israel. Like you said, we're canceling out student debt, just, spending money. And now I've seen new strategies saying, hey, U.S. military is not spending enough. Let's add a couple more, billions of dollars in there, and let's get that up well past $1 trillion in spending for our military on an annual basis. Is this just only going to add more fuel to the fire, Kevin?
Well, yeah, when you print up dollars like that, you're paying off the student loans and you're sending money to Ukraine, you're sending money to Israel, you're sending money all over the place, and there's no fiscal responsibility, then what happens to your currency? Well, it's pretty easy. From 2020 to the end of last year, we lost 24% of our purchasing power, and everyone's seeing it from purchasing clothes or groceries. The things that we all need are getting extremely expensive. So that inflation is showing up, and it's going to continue to show up, and it's going to get a heck of a lot worse if China and those other countries continue to sell those treasuries, because now not only did we print up a bunch of money here in the United States that's causing the value of our current dollars to fall, but now those dollars that they've been holding, like the mutual fund of Apple, they're now going to come back into the United States, and you're going to have more money chasing fewer goods. The inflation stays higher. That's why Jamie Dimon says today in Fortune magazine, he says, Jamie Dimon says extraordinary government spending has him bracing for higher inflation and unemployment. That's stagflation. That's what we had in the early 70s.
Right.
And nobody's prepared for that. Nobody's prepared for that. And the reason that I think he's concerned is that these other countries could cause the inflation to be much higher than where we are today. People just don't get. They're like, hey, look, if we run into another recession, they'll probably pull back on spending. No, that's not what they do. They spend more. They go to quantitative easing. It's going to scare the heck out of these other countries. They're going to start liquidating even more. Inflation gets out of control. That's what he's worried about. That's what I'm worried about.
Oh, absolutely. I think so. And Kevin, I want to kind of shift to the next segment here where we're really talking about, how, obviously we're, and this is a channel that is really about education and really trying to, help people out. And I know that you and I obviously very big in precious metals. Obviously, I think owning gold, silver, these precious metals is an excellent way to really safeguard your interest in the future, certainly long term. Owning these precious metals is a great safeguard against inflation. I want you to talk about the last thing here is really just digital currencies. And I want you to talk about, the opportunity that's really present now with precious metals. And, I think you've made a great case for this episode. I mean, this is, again, why we keep talking about this topic is it's so important for investors to understand the many options that you have, but why precious metals should be a very good part of that balanced portfolio.
Yeah, well, I'm glad you brought up the education, because we put special reports together for people to understand, what is the history of the world reserve currencies? Why did each one of them fail? What does it look like from the US dollar standpoint compared to what happened in history? History may not repeat exactly, but it does repeat. So how can we learn from that and figure out, what to do? So we have a special report put together talking about the digital currencies that the central banks around the world are going 100 miles an hour at a blistering pace to try to make available in the next few years. There's 160 or 140 central banks around the world that are testing out digital currencies, including the United States. So we have digital dollars, the de-dollarization, which we've been talking about, and debt. That's the special report, and we try to take people through each one of those scenarios because they're intertwined together and why each one of them matter. And then here's some solutions to that, not just precious metals, but there's other alternatives as well. And what can you do to help protect yourself from a falling dollar and possible de-dollarization, possibly the US losing its world reserve currency status? That's where people should start. Sit down, understand it if you can. And if you can't, give us a phone call. We can kind of walk through it a little bit and then go do some more research so that you can really understand it. Google it, do whatever you need to do. But you need to get educated on what's happening out there. Otherwise, in the next 5 or 6 years, if you get another fall of 24, 25% of your purchasing power and you're not prepared for that, it makes it very hard for your retirement accounts or your retirement period. So we just need to help people get educated and prepared.
Yeah. Oh, I think that's a very big thing. And that's why I love partnering with Lear Capital, because your primary focus is on education. And I think you have a great report that I've read that is gold at $3,200 an ounce. That's another report that you've been able to give out to many of our subscribers. And many people have messaged me, really telling me that they really enjoyed that report because it's so well written. And again, I think that's really the primary goal here is educating yourself. And I think you just said the 3 Ds. It's digital currency, de-dollarization, and debt. Right. The 3 Ds. So we've got another special report. Kevin, let's kind of come to the end of today's interview, and I just want to give you the final words. And I think you also have a special offer for the people that are viewing today's video. And again, I just want everybody to really understand to use Lear Capital as a resource. I think that's really the key message is have a phone call with them if you're interested in learning more. You guys do a great job of educating. I've certainly learned a lot more, and it's something that I'm very passionate about because I follow geopolitics every day. It's what I do for a living, and I want to make sure that my assets are safe and that I'm building a good future for my family as well.
Yeah, again, back to the education. That's what we would like to do, because an educated investor is just a much better investor. They don't make snap decisions. Oh, gee, this is happening, so I need to change my strategy. It's what's the long term? What's the tipping point that's going to, uh, you know, help my investing over the next 7 years, 10 years, 15 years, 20 years? Those are the time frames that we look in. So if you're a day trader, you want to double your money overnight, we're not the company for you. We're trying to help educate and get your retirement headed in the right direction and things like that using precious metals, but we also educate on a lot of different investment opportunities. The second thing that we love to do is make a special offer for great programs like yours, Cyrus. I mean, just helping people get educated and help them go in the right direction. So what we're going to do for your podcast is give away $250 credit for anyone who calls and asks for the special report. We'll put $250 automatically into their account that they can use for shipping, insurance, setting up their IRA with their IRA fees. Whatever it is, you can use that $250 with your purchase. It doesn't go away, so it'll just stay in the account. And whenever you get educated and possibly think that precious metals are for you, then you can use the 250, or they can use the 250 with their purchase.
That sounds awesome. Kevin, thanks you so much for, again, coming on the show, and just love bringing in experts that we can really dissect all of these, global trends that are affecting the future of our world. Obviously, we live in a global economy. So many things are connected. So, this currency wars that we're seeing the de-dollarization, the dumping of U.S. Treasury bonds, all of these things are so vital for all of us. Even if you don't have an interest in geopolitics, it does affect your dollars or your currencies, wherever it is. And obviously, United States, China, Russia, all of these countries are very involved in that. So everybody, just a final message, give the team at Lear Capital a call. The 1-800 number is here. It's 1-800-489-6450, or you can simply go to learcyrus.com. Kevin, once again, thank you so much for your insights and coming on the show. And I'll look forward to bringing you back on at some time in the future, because I know we're going to keep discussing this, and there's always new trends to be discussing and breaking down for our viewers to understand.
You bet. It's always a pleasure. Thanks, Cyrus.
All right. Thank you.